Good morning and welcome to the Gold Fix. My name is Vince Lanci, courtesy of Opportunistic Trader, and we're here to get you ready for the gold day. Start by discussing yesterday. Okay, we'll go to we'll start with the daily chart. All right, so we can get a handle. Try to ignore the trend lines here for the moment, but yesterday was, if you were paying attention to multiple markets, uh, the stock market right about the time Powell spoke, started to sell off. Bonds had already sold off the 3.23 and a quarter yield for a little bit, and gold rallied on the back of a weaker dollar. Gold did not rally as the stock market was coming off. Remember, I say that a lot. I'll keep saying it. Gold is not a hedge for a quick stock market correction. Gold had been rallying on the back of a weak dollar during the day. If you remember the numbers we gave you yesterday, they actually were too good to be true. They worked very well. We said between 12:05 and 12:08 was a dead zone until after the first hour. And after the first hour, it would be a buy if you were trading up to, say, 12:11. And in fact, let's look at that intraday. Uh, look at the 1 hourly. All right. So we're looking at the this is the hourly contract, and we'll try and make it so that it all fits on the screen. All right. Okay, so what we're looking at here is starting yesterday on the 4th, uh, the market had been uh, stronger. And after the first hour of the COMEX day, uh, I was uh, looking to buy it if it was between 12:05 and 12:08. And then looking to take a profit in the 12:11, 12:12 area where those trend lines were. And the problem is, I did not get the buy signal that I wanted. The market was a buy, but at that point we were trading 12:08 when my signal went off, and so that would be like buying at 12:08 to make $3 would not be enough to justify the risk, which was more than $3 for my stop level. We did notice, and I think this is important. I'm going to tell you why the market has been a sale every day at 11 o'clock, and may be your last chance to play that today. We got a sell signal when the market broke uh, back under 12:08, and we did sell it. Uh, we sold it at 12:07.70, looking for 12:04. Coincidentally, after 11 o'clock, and coincidentally on a Bollinger Band breakout, or break in, I should say. We were impatient, which is always the problem when you're trading gold, trying to be patient and trust your system. And we took a 7 tick loss on that trade. Now, but you'll see that gold continued and proved the signal right, and the person operating the signal wrong. I think it's important to note that yesterday, in not necessarily in the order I'm saying, dollar was weaker, gold was stronger, bonds were hit, and then stocks got slammed. Bonds recovered a little bit, gold sold off, and then the stock market bounced off of its lows. Now, there's a lot of different explanations that people can give you. Correlations are a mess these days. If you're trying to look for a correlation that lasts for more than 24 hours, good luck. But the one correlation that does matter is the US dollar. So as the dollar strengthened, gold sold off again. It has been notable that in the last 3 or 4 days, when the dollar has been weaker, gold has been reacting a little bit, which gives me the sense that perhaps the selling that I've been alluding to, that I think is trapped above the market, may soon be filled. But that's an opinion. Let's get to some really good observable information that's good for a trading pattern today. All right. I want to go to here. All right. Now, let's go to this picture. This is an hourly picture starting from Friday. Every rectangle represents the 11 o'clock hour. All right. Every white arrow represents what the market did after 11 o'clock Eastern time. Now, after 11 o'clock on day one, uh, the gold market dropped. Day two, sideways. Day three, dropped. Day four, dropped. Day five, dropped. Day six is today. Let's see what happens. The pattern is unmistakable. And I even get to the one that didn't work. So, in one, two, three, 4 out of 5 instances, gold dropped after 11 o'clock. And in one instance, gold went sideways. All right. So, let's look. Before we get to the cause, let's look at the behavior. uh, and the one exception. The one exception, if you're new to looking for mechanical signals, and that's what this is. This is a mechanical signal that will last, I think, one more day. Gold moved sideways during that period and then rallied. Now, you could say that the signal is luck, 4 out of 5. You could also say, as I would say, is that this to me is a market that was just overpoweringly bullish, and all the 11 o'clock and post 11 o'clock selling could do was make it move sideways for a little bit. The question is why, and the answer is China. My opinion, but people who put skin in the game when they're trading, um, uh, they're taking risks on their opinions. They're not just saying things and selling analysis. So here's my feel. A lot of people speculate on Golden Week and what it can do to the gold market. Golden Week, just because uh, it's a holiday in China. It's a week long. They have two of them a year. A lot of people will make a lot of it. That's bullish for gold. It's bearish for gold. Whatever the reason, but the official operations of the PBOC shut down, and you'll see that reflected in the onshore uh, yuan, the renminbi, being flat, while the offshore currency trades as it normally would, or as you would think it normally would. This year, gold is, if you want to look at it that way, gold has rallied during uh, uh, the Golden Week. Now, why? If China's on vacation, to me, that implies that China is a seller of gold, and when they come back online, gold will come off. I don't know that that's true. I'm pretty sure it's not true. What we're looking at here is the reason that gold is allowed to rally, in my opinion, is because gold and the yuan are increasingly being pegged for the benefit of their oil contract. And time will tell if I'm right. I've done enough work on this to think I am right, and but I'm not married to my decisions or opinions. But what we see here is a trade in gold. Now, why is it at 11 o'clock if China's closed? Because that's when London shuts down. And anybody who is operating in China uh, can't operate in China. They're operating in London. Now, they do a lot of their business in London anyway, because that's where the gold is taken from. But you are seeing, after London closes, gold sells off. So, without getting too much into the reason, as active traders, let's just say this: when 11 o'clock comes today, and you have a bias that's bullish, pay attention uh, to how it reacts over the next hour before you buy, or buy and have a tight stop, or do whatever it is you do to manage your own personal risks. If you turn bearish, you will um, be right or wrong, and you'll probably quickly see that. Now, I think this is a really good trade. It's mechanical. If it lasts, if it lasts today, uh, if it happens again today, I wouldn't be surprised. But the jobs number is today, and that may uh, supersede any effect of the 11 o'clock sell-off. Uh, it may slow it down if gold is rallying. It may exacerbate it if gold is coming off. But I don't think it will be the thing that matters the most today. But I do think it will have an effect. All right. Now, here's the same chart All right, I've added. Well, the technicals were there. We'll talk about the technicals here as well. All right, I've added the system that I use for active trading, and for those of you that trade options, this is something that was created based on a gamma hedging algorithm that I'd used for determining if I should let my gamma run or hedge it aggressively. Uh, it is agnostic. It's not bullish or bearish. It does say the market's going to move, uh, and you pick a direction based on uh, some insight into the system. Does have biases once an alarm goes off, but it also gives you two bites at the apple. If you're wrong, it's not saying that you're wrong because the market's not going up. You're wrong directionally, but volatility will expand. So using this system, this volatility based system, we'll call it VBS, and overlaying, I like to overlay my system with the technical numbers you see in the lower right hand corner. But first, I want to overlay with this 11 o'clock thing. And in the first 11 o'clock sell off, uh, you have a market that has been, volatility has expanded a lot and is overbought. So it coincides with being outside the Bollinger Bands and after having a nice signal to buy. So there's one for one. So the volatility, the VBS lines up with the 11 o'clock. And the second one, when the market goes sideways, the VBS uh, uh, has no opinion, and the market also goes sideways. In the third one, the market is overbought volatility wise at the same time at 11 o'clock happens. So, in my opinion, the correlation between or the confirmation between the uh, the VBS and this 11 o'clock phenomenon makes it even more robust. Then we get to the fourth one, and the fourth one is definitely not uh, confirming. We were already on a trend lower. 11 o'clock comes and it just kind of continues, doesn't get faster or slower, but it just continues. And we were hovering towards overbought in volatility terms, uh, which would imply oversold in market terms. And the market did come back in afterwards. But the fourth instance there does not corroborate or confirm the thing here. Now, the last one definitely does. You have a pinch in the Bollinger Bands, you have a rally, and now you're above, and you even have that long wick above that touches the yellow line that I drew, yellow trend line in the 1211, 1212 area. And sure enough, 11 o'clock comes, and not only does that wick tell you to not be long, but you're pretty sure London is shut down, and that's for some reason bearish for gold, and you're outside the Bollinger Bands. So, boom. I would say look at this closely today. Bear in mind the Bollinger Band system I use is 1.5 times, not 2 times standard deviation. We'll get into the trades today. Let's look at the numbers first. Working from where the market was versus where the market is. Um, Basically, your numbers today, and we'll talk about where the market is in a second, are similar to yesterday. Since yesterday was kind of an inside day, the market is stronger right now. I have nothing on the radar on the volatility band system, volatility based system. So today's a technical day, and I don't consider myself a technical trader, but I'll give you these numbers. They're loosely based on stuff that Michael Moore gives. But starting at the top, well, actually, let's start from the inside. Between 1205 and 1208, I see that as a dead zone, unless it coincides with uh, a, a signal on the VBS, which none is in the is on the horizon. 1201, I think 1201 is a really important number, much more important than it had been in the past. You'll see that we're hovering in that area. I think 1201 could give us a nice washout to the 1194, 1193 area. And I'll be on the alert for that, even though I have nothing on my radar right now. Uh, it's possible in 3 hours uh, I'll have a signal lining up to sell, and I'll put that in the opportunistic trader chat room. And if we do a trade, I'll put that out on Twitter after we do the trade. if you want to know what's going on, when it happens, and how it happens, uh, you'd have to subscribe. But we're not pressuring you. This is good enough. All right. So below 1194, 1193 area is 1189. Now, I put that number there because I had it for other reasons, but it coincides with a number that Michael Moore has. And he says that below this number, uh, uh, the macro bear call is on. Now, I want you to understand that when Michael makes a macro call, he's usually pretty right. And he, from 1360, he said, look for a failure and a negation of the market. So for him, the macro bear call on means below 1189, 1179, and then he lists 1167, which is our previous low. And he says below that we can go to 1140s, 1120s, and zero, as I put. Let's go to the upside now. Above 1205, 1208, we get 1208 as a number. Now, I don't want to trade 1208, but I think it's a number that you might want to trade or as a confirmation if you're already bullish and it gets above there, or you're already long, maybe a place to trail a stop. Uh, Gold hates the teens. You've heard me say that many times. I'm going to say it again that if we get into the 12, 12, 12, 13 area, as it did again yesterday, it rejected it. It does not mean we're not ever going above 12, 13 again. We have, if you go back over time, certainly got into the teens, going up and going down. The point is, it rejects teens. So I think at some point soon, we're going to hit 12, 13, and it's going to skate to 12, 20, 12, 21, 12, 22, and then you have to look at other numbers. Now, there's other numbers in the middle between 12, 12 and 12, 20 that Michael has, but I don't see those numbers as a big obstacle for that very reason. Let me see. Let's see if we can go to the next number. All right. So here are Michael Moore's numbers. Settling at 1201.60, average daily range of 10.5 bucks. His decimals are different. He's an oil guy mostly. Uh, he has numbers that are slightly different than mine, but I think where they overlap is I think what's important. 1189 on the downside. He has 1189.40 to 1186.10. That's a range of numbers for him. You can see below that, below that he's got 1182. That's a trend line number. 1178. I have 1179. He's got 1168 to 6.5. I think that's your 1167 area. And then below that, you can see what he has. On the upside, you'll see that he has 1204.20 to 1205.80. He doesn't have 1208 anymore. I still do. He's a lot of trend lines in his charting, and so the 1208 that he had yesterday might be 1210.40 today. My number is a little bit more static. Once we get into the teens, he has congestion 1215.70, 1216.90, and 1219.40. I don't and 1218. He's out of sync there. But I don't view those numbers as important at all for me. I just want to see how we react when we get to 1220.70. I think if we get above 1220.70 and we establish a new high and we don't stay there long, I think a reversal through there could be harsh and take us down to the 1189 area. So especially with whatever's going on this week and gold being higher and China being back next week, even if we don't understand why, we do know that what happened before might reverse after. And I think the reason has to do with the fact that they're not in the market repegging the yuan. That would mean if gold's higher, that would have to be a stronger yuan. Just trying to put myself in their shoes. Would they sell gold to keep it pegged to the yuan? You know what? I think they would at this point. The oil contract means so much to their economy, priced in yuan, backed by gold, however you want to look at it. It is so important to their economy, to their ability to de-dollarize, that they are pegging, I believe, uh, their currency to gold more and more. Remember, they were on the gold, they were on the dollar peg, and they're off the dollar peg, and now they're pegging it to gold. They have contracts that they're guaranteeing people alternatives, giving them gold options internally. So let's so it's 7:52. Um, so why don't we go to the screens today? All right. All right. Okay. All right. So here we go. Here's your daily chart. There's some lines that I have drawn that I've omitted for now. Um, you can draw as many lines as you want in as many ways as you want, but I really think it's quite simple. I'm trading 1207 now. You can get long here and then reassess at 1211, 1212, or you could do nothing and buy above 1212. Um, Actually, that number comes in lower now. It comes in 1210 area on the downslope, but uh, I would do nothing. That's right now. I'm doing nothing. I would look to see if I get a signal um, on the Bollinger Bands, which the volatility based system, but I don't see one coming up. Let's go to the 4 hour chart. Okay, the 4 hour chart shows an orange line upsloping. I like this line a lot. It's an upsloping line, and looking at it on this chart, one could say it doesn't really look that important because it separates so many other lines. Well, that's because this line's not a 4 hour line. It's where it comes in through these areas, and I especially like lines that break areas that get reasserted. So today, if you look at that line, it's actually converging with the yellow downsloping weekly and monthly lines, which we'll get to in a second. Uh, I don't think there's anything special to add today for active traders, except that the jobs number is big. So why don't we talk about that? Um, because I think people need to understand, metals people, myself included, need to understand better dollars pairings. All right. So the dollar is mildly firmer against most of the major and emerging market currencies today. All right. The yen and sterling are a little bit resistant to the pressure. Um, the stock market in the US weighed on Asian and European stocks today. The Asian Pacific Index fell every day this week to post its worst week in 7 months, losing more than 3.5%. Uh, this should give people a warning of a steep sell off in China when its markets reopen October 8th. Let's get to that chart since we're talking about stocks. All right. So the FXI, that's a United States traded product, but that gives you an idea. That's yesterday's activity. The Shanghai Composite, that's not active because the markets are closed. All right. So right now, Dow futures are called a little bit higher. Um, that's not the Dow futures. I'm sorry. That's the Nikkei. The Nikkei is a little bit higher. The DAX is over 0.5% lower. The stock 600, uh, the DAX is important. The stock 600, I think, is equally important. I think the two of them taken together have to be watched. It's rare when the DAX is down more than than the stock 600, which represents a broader base of Europe. So DAX would be like the stronger uh, uh, equity there. 756. Um, I'm going to wrap it up here, and I'm just going to say that uh, yesterday the dollar was down, stocks were down, oil was down, and gold gave back all its gains as the day went on. Today, I think the jobs data will be important simply because there's expectations of these whispering numbers. The ADP private sector estimate gave investors yesterday very little reason not to expect a strong report, which plays into what Powell's been saying. Any excuse to raise rates, he's going to do it. Um, there still could be some room for an upside surprise to the number on the dollar. I mean, uh, we're looking at. I'm looking at a number here. Job growth this year is okay. So we're looking at averaging job growth this year is averaging 207,000 a month. And the 260,000 is 1 in 5. We are looking for. There's been whisper numbers as high as 500 uh, added jobs. I don't see that. I think that's just nonsense. Uh, well, unfounded. Let's put it that way. It's nonsense unless it happens. Then I'm a total moron. Uh, I think anything over 200, 300 would give people will expect Powell to raise rates or expect Powell to be more aggressive. We're already factoring in a um, second or third hike in 2019. It's starting to be factored in, um, but I think what you want to focus on the jobs number is expectations are 185,000 in September. The number comes out at 8:30 Eastern time. The hurricane may distort that data, but you know, uh, hourly earnings are, I think, what's more important right now. If hourly earnings increased, say, more than 2.8%, um, you're going to see uh, inflation hawks come out. So anything that gives Powell the excuse to say things like robust, prolonged, strong, uh, uh, wage hikes are not inflationary is basically he's going to raise rates more. And I want to just say that raising rates is not bearish for gold. Raising rates, if you think the Fed knows what they're doing, is bullish. I mean, bearish for gold. But if you think the Fed is playing catch up, as I do, it'll turn out to be bullish for gold. Copper is weak this morning. Uh, Goldman Sachs made a comment, and you should, bear that in mind when you're looking at the other precious metals. Copper is weaker, and other metals are higher. Now, it could be down because of a Goldman Sachs comment. Uh, Generally speaking, copper, palladium, platinum, and to an extent silver move in unison right now, especially in a down move. So if you want to say copper's bucking the trend lower, then uh, I would say to not pay too much attention to it, uh, unless you're looking at it from a Chinese perspective. You can see that we pretty much have everything we need today. So you have your levels in gold. We have the jobs number 185 is expectations. You could see a number like 300 today. We don't know. You could see Hurricane Florence depress that number. You don't know. But one thing's for sure is uh, that numbers price relationship to number release is not what it used to be. You don't see one lead or lag the other anymore. What you do see is you see markets react in ways that are driven by uh, algorithmic behavior and a disconnect from Fed reality. Talking about things like negative rates. These are the type of things that say that we're disconnecting. When the Fed says the new normal, or we're not even sure what neutral is anymore, these are things you have to pay attention to. It's 8:01 now, so I'm running long for intentionally for a reason. Anyone who's listening in looking for Larry Benedict's AM roadmap will be at 8:30 today, and I believe from here on in we'll start at 8:30. So please tune back in at 8:30 for Larry. I'll be joining Larry for the AM roadmap, and